For 30 years, from the fall of the Berlin Wall until about 2022, investors lived in a fantasy world. We called it Pax Americana, the American peace. Global trade was easy, supply chains stretched across oceans, energy was cheap, and the United States Navy guaranteed the safety of every shipping lane on Earth. In that world, you didn't need to worry about geopolitics. You didn't need to know where the Strait of Hormuz was. You didn't need to care about the semiconductor factories in Taiwan. You just bought the S&P 500 and you got rich. But today, in February 2026, that world is dead. It didn't die of old age. It was murdered. It was murdered by debt. It was murdered by sanctions. And it was murdered by the return of great power conflict. Look at the headlines this morning. The Middle East is not just unstable, it is actively disrupting the flow of 20% of the world's oil. The war in Eastern Europe has settled into a grinding inflationary stalemate that is draining Western treasuries. And in the South China Sea, the world's two largest economies are playing a game of chicken with nuclear submarines. This is not just political noise. This is economic reality. War is the most inflationary force in human history. War breaks supply chains. War destroys capital. War forces governments to print money to build bombs. Welcome back to Crucible Markets. In the last video, we built your fortress portfolio. Today, we are going to stress test that fortress against the fires of war. We are going to explain why the peace dividend is gone, why China is dumping US debt, and why gold is the only neutral currency left on the board. To understand the chaos of 2026, you have to go back to the mistake of 2022. When the US government froze the Russian central bank's reserves, they sent a message to the rest of the world. The message was, the dollar is not neutral. The dollar is a weapon, and if you disobey us, we will turn it off. Washington thought this would stop the war. Instead, it accelerated the end of the dollar's dominance. China heard that message loud and clear. Saudi Arabia heard it. Brazil heard it. They realized that holding their national savings in US Treasury bonds was a national security risk. So what did they do? They started dumping them. Look at the charts. For the last 36 months, foreign nations have been net sellers of US debt. Who is buying that debt now? Not China, not Japan, not the Saudis. The only buyer left is the Federal Reserve. They are printing money to buy their own government's debt because the rest of the world is walking away. This is the geopolitical pivot. We have moved from a unipolar world, ruled by the US, to a multipolar world, ruled by regional blocs. In a multipolar world, trade becomes difficult. Tariffs go up, sanctions go up, efficiency goes down. And prices? Prices go up. This is why inflation is sticky at 4%. It's not just corporate greed, it is the cost of deglobalization. Your portfolio is bleeding because the world is breaking apart. Let's look at the map. There are 3 specific flashpoints that threaten your wealth right now. Any one of these could trigger a black swan event that wipes out 30% of the stock market overnight. Flashpoint 1, the energy choke points. The Middle East. We are seeing attacks on shipping in the Red Sea and the Strait of Hormuz. This is not new, but the scale is new. Insurance premiums for oil tankers have skyrocketed. If the Strait of Hormuz is closed, even for a week, oil goes to $150 or $200 a barrel instantly. If oil doubles, the cost of everything in your life doubles. Transport, food, plastics, heating. This is the ultimate stagflation trigger, and your portfolio is likely not hedged for it. Flashpoint 2, the chip blockade, Taiwan. This is the big one. 90% of the world's advanced semiconductors, the brains inside your iPhone, your car, and the AI data centers, are made on one island, Taiwan. China doesn't even need to invade to wreck the global economy. They just need to blockade the island. A quarantine of Taiwan would stop the flow of chips. Apple stock would collapse. Nvidia would collapse. The entire AI bubble would pop in 48 hours. This is the single biggest point of failure in the modern economy. Flashpoint 3, the rare earths war, Africa and South America. While you watch the news, China has been quietly buying up the mines in Africa and South America. Lithium, cobalt, copper. These are the metals needed for the green transition. If you want an electric car, or a wind turbine, or a fighter jet, you need these metals. And right now, the East controls the supply, while the West controls the debt. Who do you think wins that negotiation? Many people think war is good for the economy because it creates jobs and factories. This is the broken window fallacy. War is destruction. It destroys capital. It destroys young men, and it destroys the currency. Look at history. World War I. The gold standard was suspended. Inflation ripped through Europe. The British pound lost its status as the world reserve currency. Vietnam War. The spending forced Nixon to close the gold window in 1971, starting the inflation of the 1970s. The War on Terror added $8 trillion to the U.S. debt. Every major conflict is funded by printing money. Governments never pay for war with taxes. Taxes are unpopular. They pay for war with inflation. So as the world heats up in 2026, you can guarantee one thing. The money printer will run hot. They will print to fund Ukraine. They will print to fund Israel. They will print to build new aircraft carriers in the Pacific. This means your cash is the casualty. The purchasing power of the dollar must fall to pay for these conflicts. This is why we told you in video 7 to hold hard money. Gold is the only asset that is not someone else's liability. It is the only asset that has no political allegiance. When the Roman Empire fell, the gold coin was still money. When the British Empire fell, the gold sovereign was still money. In 2026, gold is your geopolitical insurance. So, how do you adjust your fortress portfolio for this reality? You have to pivot from growth to survival and strategic assets. 1. Defense stocks. The grim reality. I know some people have ethical issues with this, but we are analyzing markets, not morals. Defense spending globally is hitting record highs. Germany is rearming. Japan is rearming. Companies like Lockheed Martin, RTX, Raytheon, and Rheinmetall are fully booked for years. These are government-guaranteed contracts. They are inflation-adjusted. In a world of war, the arms dealer is the only guaranteed winner. 2. Energy independence. If the Middle East blows up, you want to own energy outside of the Middle East. You want North American oil and gas. You want Canadian uranium. You want energy that is produced in a safe jurisdiction, far away from the missile strikes. This is why we recommended energy as a major part of your productive assets pillar. 3. The friend-shoring trend. Manufacturing is coming home, or at least it is moving to friendly countries like Mexico, nearshoring. This means industrial stocks in North America, companies that build factories, railroads, and automation are going to boom. Globalization is dead. Regionalization is the new trend. Invest in the companies building the new local supply chains. 4. Cybersecurity. The first shot of the next war won't be a missile. It will be a cyber attack on the power grid or the banking system. Cybersecurity is no longer a tech niche. It is a utility. Companies must pay for it to survive. CrowdStrike, Palo Alto Networks, these are the digital defense contractors. But amidst all this chaos, there is one asset that stands above everything else. And it brings us back to where we started this series. Gold. Why are central banks buying it? Because in a war, your enemy can freeze your bonds. They can freeze your bank accounts. They can cut you off from SWIFT. But they cannot freeze your physical gold. If you have gold bars in a vault in Shanghai or Zurich or Singapore, that wealth is yours. It is sovereign. This is why the price is at $5,000. It is not a bubble. It is a repricing of risk. The world is realizing that the safe haven of U.S. Treasuries is actually a political risk. Capital is fleeing from debt to hard assets. This is a trend that will last for the rest of the decade. If you're watching this and you still have 0% in gold, you are betting that world peace breaks out tomorrow. Does that look like a smart bet to you? The map is burning. The old alliances are breaking. The debt is unpayable. And the war machines are turning on. This is not a time to be a passive investor. This is a time to be a general of your own capital. Review your fortress. Do you have the hard money? Pillar 1. Do you have the energy defense exposure? Pillar 2. Do you have the liquidity to buy the panic? Pillar 4. We have covered the debt. We have covered the collapse stages. We have covered the portfolio. And now we have covered the war. In the next video, we are going to get personal. We are going to talk about the psychological cost of the crisis. How do you keep your sanity when the world is going crazy? How do you lead your family? Because the biggest crash isn't in the market, it's in the mind. If this analysis helped you see the board clearly, hit subscribe and tell me in the comments, which flashpoint worries you the most? The Middle East or Taiwan? I read every comment to gauge the sentiment of our community. Stay skeptical, stay prepared, and keep your powder dry.